Joining me now is Andy Walden, ICE's head of mortgage and housing market research. Andy, welcome to NYSE Live.
Good morning, Ashley. How are you?
Well, thank you. Welcome to the show. So according to your latest report, property insurance costs are seeing a historically high growth rate. What are we seeing and why?
Yeah, so if you look over the first 6 months of this year, the average property insurance being paid by mortgage holders across the country up almost 5%, up a little over 11% from the same time last year. Now, the good news is that's a slightly lower growth rate than what we were seeing at this time last year. The bad news is that pushes insurance to yet another record high out there. Homeowners are paying about $20 a month more than they were at this same time last year. Part of this is due to rising home prices and rising coverage carry that is required of homeowners out there in the market. Part of it's just simply due to the rising cost per $1,000 of property insurance coverage, which is also up 5% from the same time last year.
All right, and Andy, how do property insurance costs compare to the other components of a mortgage payment?
Yeah, so again, you were talking about PITI earlier, right? So the principal, interest, taxes, and insurance. Property insurance for the average homeowner across the U.S. makes up about $1 out of every $10 spent on a monthly basis. When you look at some of these high-cost areas, you look at New Orleans, you look at Miami, Florida, it's 25%. $1 out of every $4 that you're making on your mortgage payment each month is going directly to a property insurance. And then you look at the growth rates of insurance versus some of these other components of mortgage payments over the last year. Property insurance, once again, the fastest growing subcomponent of the mortgage payment. You look over the last 5.5 years, property insurance cost up about 70% over that span, more than twice the growth rate that you've seen in any other subcomponent of a mortgage payment. So again, that fastest growing piece of folks' PITI.
And what should potential home buyers factor in when balancing property insurance costs to their buying power?
Yeah, I think a couple of different things. One is understand the variable costs of your mortgage payment. I think typically when we go out there and take out a mortgage, we think we're getting a fixed rate loan. Our payment is fixed over the duration of that loan. That's simply not the case, right? Again, insurance, that fastest growing subcomponent. Taxes can also rise over time as well, along with your utilities costs. For most folks, their income growth can kind of keep up with that. But for folks that are on a fixed income, I think that can be very important. For folks that are stretching themselves to buy a home, I think that can be a very important piece as well. The second is understand that you can shop insurance, right? I think we have this conversation around a lot around lenders and making sure you're getting the lowest mortgage rate and the lowest fees on your loan when you take that mortgage out. Same goes for property insurance as well, making sure you're shopping those insurers against one another to make sure that you're getting the most cost-effective policy that you can.
And how is your team at ICE Mortgage helping borrowers avoid potential sticker shock when it comes to insurance costs in purchasing a home?
Yeah, and we've talked about this on the show in the past, right? The fact that ICE is kind of building this end-to-end ecosystem from shopping for a home through getting that mortgage and then the life of that loan and into the capital market space as well. We've built in multiple touch points where homeowners can shop for insurance, whether it's upfront as you're taking out that mortgage, shopping to make sure that you're getting the most cost-effective policy, or you're 2, 3, 4 years into that mortgage. Through our servicing platform, you can do that exact same thing. That the data shows that folks that shop insurance and shift from one carrier to another over time end up paying less for insurance over the long run. So again, just another way that ICE is bringing that data and technology integration in to reduce that cost of homeownership.
All right, and Andy, where are property insurance prices rising the most, and what do you think is driving up the cost in those regions?
Yeah, a couple areas stand out to me from a geographic perspective. One of them is kind of unsurprising, right? You look at the Southern California area, an area hard hit by wildfires earlier this year. Los Angeles has the fastest growth rate of insurance so far in 2025. Insurance costs up 9% over the first half of the year, up nearly 20% from the same time last year. And it's not just Los Angeles. You look across Southern California, 15 to 20% insurance growth year over year. The other area that stands out to me is almost the opposite end of the coin, right? It's your hurricane-prone areas of the Southeast, namely Louisiana and maybe more closely Florida there, the areas that you're seeing the highest insurance cost, but actually prices starting to flatten out in those areas. And a few of those markets actually saw average property insurance premiums come down just a little bit increased reliance on private insurers in those areas, moving back into some of those markets after exiting in recent years, reduced reliance on state-backed plans, and you're starting to see that play out in the form of kind of flattening insurance premiums and even some improvements in some of those areas.
And Andy, what should potential home buyers be mindful of when considering making a purchase this fall, and how does it differ from the summer market?
Yeah, it's a good question. We are seeing some very noticeable inflections here. The first one is interest rates, right? If you look at what happened last week, the 30-year fixed interest rate, according to our ICE index, dropped down into the 6.36% range. That's the best it's been since last September. Correspondingly, home affordability, the best it's been since last September as well. So I think that'll be enough to draw some buyers back into what had been a softening market. We had been seeing home prices really cool off over the last 7 months. With this shift, I think you're going to see a little bit more firmness in home prices. Some of those areas in the south and western regions of the country that had been moving into surplus, we had already seen some sellers starting to pull back when they couldn't get the prices they want. Those inventory surpluses had started to move down a little bit. Now this could inject some buyers back into the market and firm things up a little bit as we move towards the tail end of this year.
And what are you following for the rest of 2025?
I think the interest rate dynamic is going to be absolutely paramount, right? Everything that's driving lending, everything that's driving the housing market really starts with what's going on with interest rate dynamics. So it's going to be, what do we see from labor? What does that mean from the Fed? A week ago, we were not talking about a 50 basis point Fed cut. Now there's a fringe chance that takes place. So again, it all starts with interest rates. What happens from the Fed here in September? What do they signal from that point forward? What does that mean from 30-year rates? And everything's going to flow downhill from there.
All right. Thank you, Andy Walden, ICE's head of mortgage and housing market research.
All right. Appreciate you having me.